It was our own Josh Brown, by the way, who first coined the term HALO back in February, which stands for Heavy Assets Low Obsolescence. The idea was looking for names that would not be displaced by AI. Well, today, ETF provider Roundhill is launching a new fund to capture that strategy. Roundhill CEO Dave Mazza joins us now. It's good to see you. Welcome.
Thank you.
So how did this all come about? You heard Josh talk about these names and thought, hey, might be a good IPO. I mean, a good ETF. My head's in the IPO world. Sorry.
No, understood. And it's not that too far from the truth. I think Roundhill Investments is actually best known for our thematic AI technology-focused ETFs. But when we saw this term that Josh Brown coined, it really resonated with us due to the fact that, of course, we're seeing AI disruption across industry after industry. But these companies are really AI immune and have the ability to withstand whatever occurs with large language models or agentic AI because of their durability by focusing on hard assets and low obsolescence.
You get a founder's fee out of this or anything, or?
Oh, no, I'm involved. So I spoke to these guys shortly after they filed, and I said we could do a deal together or maybe a lawsuit. I don't know. What do you want to do? And no, I know. So I know Dave and his co-founder Will Hershey. They're terrific guys. I know them for a long time, and I've been impressed with a lot of the products they've launched. And I said, if you guys are going to do this, I want to help. I want to be involved. On a limited basis. I have 12 other day jobs. But I love what they've built. And because I'm in such agreement with Brad Gerstner about the disruption that's coming, and because names like Adobe, which is now 10 times forward earnings, and ServiceNow and Salesforce, they're all on the 52-week low list, and they go lower every week. I was looking for a way to say, I want to own the S&P or the Russell 1000. I want to own the market. But what's the least disruptible names that I can own? So just looking at their top 10, and this is not an endorsement of any individual stock, it owns TFI International. Brad, you know what that is?
Nope.
Good, nobody does. It doesn't even matter. Lennox International, which is HVAC, Anglo Gold Ashanti, Barrick, Watsco is in here, Southern Copper, JB Hunt. These are great businesses. Some of them are 100 years old. There's nothing you could type into an LLM that's going to change what they do. At least not in a negative way. They're probably all beneficiaries of AI, quite frankly. So this is just a way to express a view. We think there's going to be massive disruption. We want to be invested. Let's not be invested in the most disruptible companies. Let's look for the companies that are AI resistant.
Hey Dave, some have looked at, now maybe not this one specifically, but you guys are the DRAM folks as well with that new ETF. And some have said, well, now here we go. Now the launch of these types of products trying to capture the whole AI thing now is one of those signs that people look for when they're saying, oh, this looks like a top to me. How would you address that?
I think we've seen that before. People were saying that about our Magnificent 7 ETF, MAGS, when we launched that. They were calling it when we launched our meme ETF, which is up 65% year to date. And most recently, DRAM, which is one of actually the most successful ETF in history, is up 96% since we launched it on April 2nd. Now, that doesn't predict where the future goes, but I think it's a little bit easy just to say that because you're launching an ETF, it means that a trade's over. In fact, I think it's actually unlocking the potential for investors to access stocks that they haven't had before.
Well, I mean, the DRAM performance since the launch has obviously proven, at least the early calls, not to be correct. Dave, I appreciate your time very much. Thank you.